Welcome to another episode of the BlueFort Blueprint. Today we're back with Sayam and Viraj after the credit card episode we did. Some of the comments that we've been getting in the last 1 year is my portfolio is in the red, the funds are doing horribly, I've missed the bus, I should have invested or sold way back. And why don't we invest more in Europe or US? India is absolutely terrible. Well, today we're going to unravel all of this. There's a lot going on with the tariffs, with the GST rate cuts, and the simplification, and just a whole lot more going on in the last 1 year. So, guys, let's discuss what markets are looking like, because a lot of investors are very worried. The investors that we've onboarded in the last 1 year have not seen any returns. It's been over 12 months and people are just not used to this anymore, especially after COVID. So what are your thoughts? How do we navigate the next 6 months to 1 year? Is it the end of Indian markets, or are we going to see some sort of revival anytime soon?
Yeah, so what's happened in the last 1 year is that Sensex, Nifty have not delivered any returns. Mid-cap, small-cap indexes are down. Whereas anywhere else you look, whether it's China, Europe, even Japan and the US, the returns have been phenomenal, 20% plus. And people are concerned, right? And what we have been telling them is that this is the market is an outcome. What we have to look at is whether the fundamental points that made India a very strong economy, those still remain. And the answer is yes. The biggest example of that is the GDP number that came out for Q1, 7.8% GDP growth, by far the fastest in the world, way more than what was expected, which was 6.5%. The Indian economy continues to do well. Yes, there are some questions around whether that number is accurate. If it's not 7.8, it still would be somewhere around 7%. Still very, very positive and strong. Add to that what the Indian government, the steps that they're taking, cutting interest rates, cutting income taxes for the masses, cutting GST rates, all of these things affect the masses a lot more, which is a very price sensitive segment. Any cut in the prices there will increase our consumption, increase the volume offtake, and that should again boost the economy further.
Look, India's returns, right, in the last 1 year, I mean, we've all seen 0% negative, in fact, in some time frame, correct? It's more sentimental than fundamental, because I believe it all started after Donald Trump came in, and with the tariff wars and all of these global. India was in a war as well for a couple of months, so all of these factors played out. But as Sayam pointed out rightly, 7.8% is no mean feat. Yeah, it's a brilliant number, the Q1 number for GDP that we have, and also I believe markets still haven't got the memento for that. It's the macros are in line with the GST rate cards, with your income tax slabs, with 11.21 lakh capex. That's brilliant, which came in the budget. So markets are going to get that memo sooner than later. And I personally believe that when macros are a go and markets are a no, right, it's the best spread that you can have as an investor to invest in our country.
And I think investors are very, very short-sighted. They have a very massive recency bias, which means they extrapolate what's happening in the last 2-3 months and assume that's going to happen forever. So might I just remind everybody who's watching that it was in 2023 that Indian markets were actually one of the best performing markets globally. And no market just goes on forever. It's completely cyclical. We've actually had this time correction. So time correction is where markets don't drop very much, but they don't go up either. They're in the same range-bound sort of place for a very, very long time. We call that a time correction. The last time that happened was actually fairly recent. So this might help some people who are watching. The last time this happened was from October 2021 to October 2023, where for 2 years, market gave us absolutely no return. So it's not true that COVID was just a one-way streak. We've had this before. However, from October 2023 to September 2024, that is another 12 months, markets went up by 37%, right? So for 2 years, absolutely zero returns, but in the year after that, it was up 37%. Now, what's very, very interesting is in that 12 months that the markets gave 37%, it was only 4 to 5 months where a bulk of those returns came, right? So October 2023 to Jan 2024, the markets went up by 15%. And then May 2024 to September 2024, which is another few months, markets went up by 19%. So the point I'm trying to make is when after a time correction, bull run is inevitable and it always comes, but it comes very unannounced and in short bursts, very, very quickly, right? So you may just find that next year, let's say in 2026, I'm not trying to make any predictions, but let's just take an example that 2026 Jan to maybe March 2026, you may just see the markets move up by 11%. Now, if you miss those 2 months, you will have basically not made any return, or you've missed your bus for you know for the next 2 years or 3 years, right? So it's only those 2-3 months which make a bulk of the magic. That's why you have to stay invested through thick and thin. You can't just decide when to enter and when to exit. That strategy does not work anymore at all.
No, and as you mentioned, right, it's logical. So let's, in our world, right, we speak about logics and facts, right? Let's look at it logically. In right now, the government has put in more money in your pocket by just telling you that, okay, no tax till 12 lakhs,
12 lakhs.
correct? So automatically there is more money in your pocket. With the GST rate cuts, what they've done is they've made everything more affordable. You want an AC, that's more affordable. You want a fridge, that's more affordable. Even a luxury car, what people are saying on the contrary, it's more affordable than what it was before. So now, as a consumer, when you have more money, logically what you're going to do, you're going to go out and buy. When you buy, it's going to increase the consumption in our country, it's going to increase the GDP, and so it will increase the corporate earnings, which of course drives financial markets. So logically, our markets are going to do well.
Add to that interest rates are coming down as well,
Right,
which means EMIs, people are, their monthly installments will come down. Again, leaves
Correct.
more money in their pocket to spend. And, we've discussed about this stuff about India being fundamentally a very strong country. Of course, we've discussed that many times. We may even have a bias here, but it's not just us saying it, right? S&P upgraded India's credit rating.
Correct.
Yeah, that one was
and
huge. Yeah.
That is quite massive, right? Which kind of flew under the radar. People often ignore a lot of the positive news when the market is not doing well. And vice versa, when the market is doing well, people ignore a lot of the negative news as well. So, it's important to keep in mind that globally India is being seen as more of a powerhouse now.
And a lot of people, despite repeatedly saying this again and again, a lot of people try and enter the markets when the markets are at a high. Right now is probably the best time to be entering with a lump sum, right? But unfortunately, a lot of people who came on board last year, especially the NRIs who had seen that Indian wave, right? A lot of them started investing in September 2024, October, November, December, and now are quite upset because they've not seen, their portfolios are in single digit. So to those guys, we just want to say that you see the returns when the markets are at a high, but you make the returns if you invest at a low. You can't possibly invest, let's look at it like this. In fact, this is probably a good rule of thumb, is if the 1 year and 2 year returns seem exceedingly high in a particular market, then that's probably a cue to not invest in that market and just wait for a little time and spread out your corpus, spread out your lump sum through an STP, SIP. But if the 1 year return, like right now, Nifty is sitting at a 1 year return of probably 0% or maybe a 1 or 2%, it's probably a very good bright signal. This is a very layman rule of thumb that I'm saying, but it almost always works. I've been surprised in the last 10, 11 years of my career, it's always worked. If the market is not done well in a year, probably a good time to invest.
No, I strongly believe that if you're shorting India right now, you're shorting common sense. There is absolutely no logic there.
Nice.
Wow,
Lovely.
nice. Also, one more technical point I want to bring out is that people often say Nifty is overvalued. They look at the PE ratios and they say that, look, China is so much cheaper, Europe is cheaper. That's fine. But Nifty mein kya hua hai pichle ek saal mein, that a lot of the components, the composition of Nifty has changed from cyclical PSUs and slow growing industries to much faster growing industries, right? So some of the names, let's say, for example, that have been added in the last couple of years is Zomato is one, which is growing tremendously fast, right? Tata Consumer is one, Trent, right, which is one that manages Zudio, and what's the other one? Zara. There's Indigo, right? There's Shriram Finance, and what companies have gone out? The likes of BPCL, IRCTC, UPL, Shree Cement, which is cement is a very cyclical industry, Britannia Industries. So the composition of Nifty has changed quite a bit. But despite this change, earnings are still at about 20. PE is still about 20 multiple. So objectively, if we were to take the previous composition, Nifty is actually cheaper by about 8-10%, right? Yeah. So despite faster growing companies, if Nifty is at the same multiple, that means that Nifty is actually cheap, and 20 is actually not a even an average. It's a good time to buy, is what we would say.
That's actually a very good point across the board. So not just Nifty, but also mid caps and small caps. A company that had a market cap of say 50,000 crores, say 5 years ago, was seen as a large cap. Correct. Today, it's seen as a mid cap on the lower end.
Correct.
So the valuations of Nifty companies, mid caps, small caps, should be seen with that in context, not just what it was 5 years ago, 10 years ago. That's, I think, too simplistic. Now the companies, even a mid cap company or a larger small cap company, is far more established and has far more scale than it did 5 years ago.
What are some of the cautionary or risks that you see that one should be careful of?
So we have to talk about the tariffs because that
course.
is a thing. 50% tariff on the on exports to the US. That is one of the main sentimentally negative things, and of course, we can discuss and debate the numbers, but there will be some impact of that, which we're seeing in the market. My take is that yes, it's negative for the short term, but necessity is the mother of all invention, right? We see when something like that happens, literally a week later, we see the BRICS countries coming together and being a lot
photo
more
op,
strong.
right? Yeah.
The photo op, but
Yeah.
there will be more than that,
I'm
right? It
sure,
won't
yeah,
just
of
be the
course,
photos.
yeah.
You'll see China and India now again talking. They're opening direct flights.
Yeah.
It's a small thing, but very symbolic, right? So these kind of things, I think, will make a difference. And I think we'll lose out somewhere in the US, but there'll be a lot of other opportunities that can open up to make up for it somewhat.
Regarding the tariffs also, right? I believe the uncertainty is killing us right now. Even if it's fixed, right? If it's a 50% or a 25% or whatever X number of percentage is your tariff, right? Specifically to all the sectors, then the Indian businesses, Indian companies can kind of plan around it. Right now, what's happening is you plan around one thing, and suddenly this guy will wake up tomorrow and be like, okay, now it's double.
That's the problem with Donald Trump. No one can predict what he's thinking.
Exactly,
Yeah.
which is where the essential risks are.
Correct. And I think this guy is doing his nation like a massive disservice, Donald Trump, because they've worked really hard to create the India-US relationships, which he is very quickly on a whim destroyed. Not destroyed, but definitely damaged to a great extent. India warming up to China is, see, there's in geopolitically, there's nothing that is permanent, right? You can make and break relationships like this. China also, I used to think I was wrong. I used to think that they are massively impacted by the US tariffs, but when I looked closer, China has actually de-risked itself and hedged and spread across its trade across several different nations, right? So even its trade with ASEAN is actually much bigger than its trade with the US. And now China's exports to the US is only 10%. So when you said necessity is the mother of all invention, I think India will also do something like that, where India will try and spread its exports across all of other maybe EU might be a major market that might be coming up, or Southeast Asia or East Asia for that matter. So India should also look at spreading across its risk. And I think this will probably damage the US a little more than they're thinking right now.
This kind of happened in the 1960s. It's not the first time India is being placed under tariffs. During the Vietnam War, in the 1960s, India was really struggling for food. Right? There was a food crisis in India, and we used to depend on imports. And the US during the Vietnam War put some sanctions on us because of our friendship with Russia, who was supplying to Vietnam. Point being that the food crisis was made worse, and that was the time when the Green Revolution started in India, and we became very self-sufficient in food, and today we are net exporters of agriculture. So that sequence of events kicked off India becoming very, very self-sufficient in agriculture and becoming net exporters. And I wouldn't be surprised if this happens. Obviously, this is a very long-term thing, but I think we will find a way around it.
Yeah.
And honestly, our government is on the offensive right now. It would have been very easy to kind of bow down to US's requirements or be like, okay, you know what?
It's very impressive to not do that.
Exactly. So
apparently Modi didn't pick up Trump's call 4 times, and he refused to go to the US. So
I think that's the time difference, maybe.
That's the
time difference, maybe. But I believe we have been acting as if we are on the offensive. We've not stopped buying Russian oil. Neither we have been like, okay, you know what, we'll reduce our tariffs to the US and all of that. And Modi, kudos to him. He's always been in his entire tenure more of make in India, self-dependency and self-sufficiency sort of ideas, which right now, which we can see the fruits of that, right?
Yeah.
Wherein it's not like our markets have crumbled. It's very easy to say that, okay, we are 0%. We are one of the worst performing indexes of the last 1 year. But you see what we have been going through in the last 1 year. We are the only country singled out for buying Russian oil or for the war with Pakistan or whatever it is, right? And
Lots
still
of
it's
countries are
0%.
doing
I
it.
believe that's
Yeah.
a big win for our portfolios rather than looking at it negatively.
Yeah. So coming back to like other points of concern, I think while these tax cuts, GST cuts, all of these things are great, it puts more money in the pockets of people to spend on. I think the one thing that we do need to as an economy continue focusing on is job creation. Because that is what will really add value and keep our engine running and keep compounding. That is something that, needs to be worked on, improving education in our country and improving the job opportunities. They are working towards it. For example, trying to make in India create more manufacturing jobs. If that can happen faster, I think that would be great.
I think vocational education is something that needs to be instilled into our workers, like China has done over these decades. One criticism I have for this government is that it's been, almost 15 years, but they haven't quite been able to set policies that will benefit the masses for the long term. They're still thinking election to election, which is especially in 2019.
Even stuff like labor reforms.
Correct. Yeah, they haven't had it seems like they haven't had the spine to. Obviously, there's been agitation, and it's not easy. I understand, but they haven't had the spine to implement what they have thought. Especially in 2019, when they had absolute and like utter power. That's when I was expecting, a lot of bigger changes. Even these GST reforms are fantastic, but perhaps 3-4 years or maybe even 5-6 years a little late. So we would love for the government to see. Because the average, let's face it, when we're also looking to hire the average graduate from India, right? Somebody who comes from a tier 2, tier 3 town is not necessarily employable. They have a very, very long way to go, and they don't really have a skill. And unless the job creation thing is fixed, then our demographic isn't necessarily an asset. It can become a liability also. So we must create that infrastructure for people to be able to make a living for their family, and create that constant ladder from lower middle class to upper middle class and wealthy. And of course that will happen, but the government's job is to make it as fast as possible. So hopefully with these GST reforms, they can make even more and more such reforms to make sure that is happening.
No, I believe that will happen, especially as you mentioned the GST reforms, right? Just think of it from this perspective. Let's say, as I mentioned before as well, certain products, certain commodities are getting cheaper. For example, if you're using a tier 2, tier 3, let's say an AC, for example, and today because of Daikin being cheaper, you'll have the best AC in your home. So what is happening is that's a structural shift, because going forward, that particular individual or the consumer is not going to go below that. So that sets a new base, right? You're always going to upgrade yourself.
Yeah.
And to upgrade yourself, it's necessary to upskill. It's necessary to create that environment within yourself and around you that people upskill as well, which of course, which, as you mentioned, right, government.
No, there's no question. India will grow. See,
Yeah,
there's no question.
exactly.
But I think the what I'm trying to get at is the pace of growth.
Correct.
Because we will grow in, like, if you see 20 years, 40 years, 50 years, 100 years, of course we will grow. Eventually we'll get somewhere, right? We'll get to a 15 trillion economy, 20 trillion economy. But the question is, how soon can we get there? What policies can be made to get there as soon as possible? Basically, while we don't like giving China as example, but maybe some sort of mimicking China's growth is what we should be looking at, and seeing what policies and their government have been able to establish to get that sort of growth. So that's something we would like to see. But as far as bringing back our point to as far as markets are concerned, we are not too worried about. We think that time correction is normal, and what I would do with my money now is start deploying some lump sums, because I think it's been long enough, and there being some major like steps being taken to for which I think the market should react positively.
No, a lot of people in the last couple of days, right, after the reforms and what has been happening with the income tax cuts and all, have been asking me that, is this because the government is kind of losing its power, and last time they had to make alliances to form a majority and all of that, right? I believe that it could be policy. I don't care about politics. I think I care about policy. What makes money for our clients, what makes money for investors
is the country in general.
Is the earnings growth, right? No moral compass is going to, or no moral judgment is going to be like put money into their pockets. So I completely believe what they are doing, and I really believe that India is on, the next leg of bull run is right down the corner.
Yeah, I mean, to summarize where India stands today, everything we've discussed, we are growing faster than China.
Yeah.
Our inflation at this point is lower than Japan.
Correct.
And our fiscal deficit, our public debt is less than the US as a percentage of GDP. So we're very well placed globally compared to all other countries. And I think that will start reflecting in the market.
All right. So thanks a lot for watching. I hope this was helpful, especially, in an uncertain time like this. Please do reach out in case you have any questions. Comment down below. Make sure to like, share, and subscribe. Thank you so much for watching.